The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They tell us the number you need to put into your mortgage calculator to find out what your principal and interest payment would be. Don't have a mortgage calculator? Get our mobile app, rsrlinks.com/mobile app, rsrlinks.com/mobile app. Conventional 30-year fixed rate loans locked yesterday at 6.745. That was up. Jumbo 30-year fixed rate loans locked 6.987. That was up. FHA 30-year fixed rate loan 6.443. That was up. 30-year, the VA 30-year fixed 6.625. That was up. I'm seeing a pattern here. USDA 30-year fixed 6.509. That was up. Looks like they were all up. If you want our market thoughts every weekday morning, as early as the data allows, rsrlinks.com/market minute, rsrlinks.com/market minute. Now let's take a look and see what the markets are doing today. As I shared with you a little earlier, if I was able to get my screen back there, S&P 500 is now up 12.43. We've got the 10-year treasury is up 2 basis points. The mortgage bond, the 6% coupon, up 1 basis point. Yeah, they're flat. They're not doing anything. They're all just waiting for 11 o'clock California time and then more at 11:30 California time. That's what we're going to hear from the Federal Reserve. What are they planning to do with interest rates? 11 o'clock, and they come out with their statement. 11:30 is the press conference. And probably by about 12:30, we'll see what's going on with the markets. There's almost certainly they're going to cut 25 basis points today. What does that mean for mortgage rates? Well, I explained the whole thing to you. rsrlinks.com/forecast. rsrlinks.com/forecast. Forecast rate, I think, is what we did. RSR Links. Josh, would you check which one of those it is? rsrlinks.com/forecast rates. Interest rate tells you want to go to rsrlinks.com/interest rate. That'll tell you how interest rates are derived for your home loan. rsrlinks.com/forecast or forecast rate. Josh will tell us in a minute. That's going to tell you what's going to happen with interest rates, because there is a relationship between the Fed funds rate and the 10-year treasury. And there's a relationship between the 10-year treasury and the 30-year mortgage interest rate. So if A plus B equals C, well, A and C have a relationship, right? Is that the way it works? So let's take a look and see. Let's continue my quest here. So they're going to raise the rate. They're going to cut the rates by 25 basis points today. Real story is going to be Powell's press conference and the summary of economic projections. We believe the Fed will signal less rate cuts next year than their dot plot chart, which will probably add some pressure to bonds, as it will show the Fed's more concerned with inflation. The labor market is stronger than previously thought, maybe. Previously, the Fed forecast 100 basis points of cuts on September 18th, but that could be reduced to 75 or even 50 basis points. 50 basis points equals 0.5%. I think we're going to see 25 today, 0.25%, and then 2 cuts next year for a total of 50 basis points, 0.5%. Fed can change their mind quickly. Whatever they show today in their projections, it's likely far off from what will actually happen next year. It would only take one really bad jobs report or shelter inflation to catch up and inflation to move lower for them to change their tune quickly. One wild card to watch out for that could be helpful: the Fed has been reducing their balance sheet, but they may announce today or sometime next year that they're going to stop the runoff. That'd be great. When they do, the Fed will keep their balance sheet net neutral, which means that any assets rolling off their balance sheet will have to be reinvested back into treasuries, which is a good thing for absorbing the supply of treasuries. They may not mention that today, but there is a possibility. We do believe that they will stop the runoff at some point next year. National Association of Home Builders Market Index measures home builder confidence, unchanged at 46. Anything below 50 is contraction. Current sales unchanged at 48, again, contraction. Future expectations rose 3 basis points to 66. Buyer traffic fell 1 point to 31. Current sales almost at a 50 level, which is basically neutral. And I'm going to tell you, housing starts is a big issue. So we get permits, and that's an expense to builders. And Jim Norton will tell us more about that in a minute. But permits don't mean that the builder has to actually start something. Once they start, they've got a vested interest in finishing, and we're not building enough units. That's a good thing that we're not building units if you're into real estate ownership, because we're building, the starts project 1.29 million annualized units. Okay, is that good or bad? Well, the answer to that is we need 1.9 million in order to just be balanced. That's for new household formation and obsolescence. So if we need 1.9 and we get 1.29, which is 1.3, call it, we're short. Supply and demand tells us, okay, if we don't have enough, that means the price of housing is going to go up or at least be stable. So just right there gives you the basic information. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.